G'day, guys. Welcome to Wonderful Wednesday or Horrible Hump Day or bloody middle of the week, whatever you want to call it. Doesn't really matter, does it? We're here. We're live to you I'm coming to you live from just northwest of Hobart in Tasmania, Australia, very close to the bottom of the world. You can almost see it from here. And a long way north of that, of course, in London, or Brighton to be more specific, is my old mate Ash. How you doing, mate?
Yeah, very good, mate. Very good. Just obviously waiting on many bits and pieces that are coming out today. We seem to have a slew of things to focus on today. Obviously, ECB is one of the main ones. So when we
Yeah, I
start
guess
looking at the
we'll have a
market,
look and see what the news is, or the data releases and all those sorts of things happening today. It being April 10th, one day before my wife's birthday.
oh, very nice. Are you doing anything special?
Mate, I'll have some fresh Tasmanian salmon or Atlantic salmon caught from the fresh waters of Tasmania.
Oh, beautiful.
I'll be cooking that for dinner as soon as we finish tomorrow evening. I've bought some nice local Tasmanian Chardonnay. We'll be having that.
Very nice, mate.
And probably rustle up a candle or two or something like that, mate. And,
Not from earwax. When you said rustle up, I don't know whether that means
no,
that
not
you make it yourself. Yeah.
we'll probably go and spend $1 at the candle shop, I would imagine.
Yeah.
We've always got candles because you just never know when the power goes out. You know, both of us lived in a remote community, and right on the end of the power grid. And if there was any shortage of power, it just stopped running at our place. So
What's
you're
that
always
like, mate? What's that like to live in a kind of remote community? Does it actually because obviously most people would probably be a bit concerned that they wouldn't be able to get everything that they need. But does it have that aspect to it? And is it quite nice actually to live in a tighter community like that?
Yeah, look, it is a tight community, and the community that we lived in was a mining town, so it's a bit rough around the edges for the ladies,
Yeah.
but for the guys, it's a whole lot of fun. Of course, you work hard for I don't know, hour and a half, 2 hours a day, and then you go to the pub and
Yeah.
you finish up home at some stage. You might go and have a game of golf. There's lots of things to do in the afternoon when it gets too warm to work. So you've got to knock off. It's pretty remote out there in Lightning Ridge, but marvelous place. And as I say, it's a bloke's town without question. But yeah, a whole lot of fun and very hot, very dry. Water's an issue. Electricity's an issue. The snakes bite hard and they're
Oh
deadly.
yeah.
Yeah.
Yeah, I
A lot
think
of
that
people.
would be my biggest concern.
Yeah, look, you don't want to go walking around the mining fields at night. That's probably the biggest concern because you can just disappear down a hole. That's it. All gone.
Oh yeah, and I bet that must have happened a few times if people are
Quite
out
a few
boozing.
people have gone that way, including the tax man when he comes. There's been a few of those gone missing down holes over the years, I'm led to believe.
I mean, I bet that's for other reasons though than him just walking around randomly.
Yeah. Well, that's what the story goes. I'm sure his silly bugger he was out there at night. Why I don't know.
Oh dear.
Anyways,
Yeah.
that's got very little to do with today, I suppose. And the GDP figures are first up, and they're
There you
coming.
go.
They're coming in about an hour and 45 minutes or something like that.
Right. So there we go. So we start with the data in GDP. There's already, as we were talking just before the show started, the IMF have cut a global forecast. So they are expecting a weaker number, as you're probably got on your screen right now. So 0.2% from 0.5%. If that global growth forecast is accurate, maybe that starts to filter in already. I mean, they're cutting global forecast for 2019. So that would start to suggest that these numbers do start to be impacted. I mean, looking at the chart on that, let's just
Yeah,
see
we
what we
we
got.
kind of flagged it yesterday that the pound was going to have a ceiling on it because of those numbers, and that proved to be the case. Pound came off yesterday. Pardon me.
Yeah, I'm not sure whether it's fully because of that. You know, but we have to remember that the European Union and the UK government have been in wranglings this week, and today we get an actual announcement of what the outcome of those wranglings are. So I suspect with the pound, the lack of movement is probably as we await decisions, rather than too much else. But you know, yes, the GDP numbers will play a part if they are stellar or really poor. But when it comes down to other aspects of the pound, I think there will probably be, you know, some people that will be quite happy if the GDP numbers are coming out weaker, but then we get an announcement of a long-term extension to the EU. I think they'll be quite happy to be buying sterling.
Yeah, look, I think they'll be happy to be buying sterling if it's a miss to the upside as well. You know, if
Yes.
even maybe even if it hits forecasts, I think we'll see the pound in favour today.
Yeah,
But
I agree.
a
Yeah, I
miss to the
agree.
downside, no. But yeah, I think on forecast or a miss to the upside, I think we'll see a bit of a rally in the pound today for the reverse reason of yesterday that I was flagging yesterday. Anyway,
Yeah,
we shall see.
yeah. So what do we had then? So 0.3, what is it? 0.3% to 0.1. So that was July. So if we look at what's been going on during the year, it's fairly stable around about the kind of 0.3%. It's probably around maybe 0.2% is around about an average anyway, isn't it? When we sort of look at the chart on that.
Yeah, when we have a big miss to the downside in, when was that? My chart's gone nuts.
February.
It was only 2 months ago, yes, in February. Yeah, it kind of suggests that there'll be a bit of a balance on that, doesn't it? I think the forecast is probably hinting that, you know, we're going to go somewhere between the two poles, and
Yeah.
that's probably accurate. But you know, you don't know until it's posted, of course.
No, absolutely not. Yeah. So we got that at 9:30, as you say. After that, we have also manufacturing production month over month. That's going to be quite important as well. I suspect all these numbers are going to be scrutinised now just to see what the health of the UK production economy is going to be like. Looking at these numbers as well.
Interesting. The forecast CPI figures for the states are positive.
Yes, they are, aren't they? They do start to come up a little bit. That could be of interest as well. I don't think 0.3. Yeah, I mean that could be an interesting number actually, because if that CPI comes you know, over expectation, and we do see some inflation with in the US, then that puts a bit of pressure on the Fed, so that will probably see a stronger dollar. Um, Interesting that that's going to coincide with that ECB press conference, which is the big one. You know, the monetary policy statement. Everybody knows what's going to happen there. You know, there won't be any movement on that. It's going to be the press conference that's going to be the likely mover today. And the CPI comes out coincides with that as well. Obviously, that's going to be a one-off announcement. So I don't know whether the dollar euro dollar will move much on the absolute announcement of CPI. But when ECB's press conference has happened and we can claw through that detail, then we'll probably get a bit more of a picture of how CPI has affected the market.
Yeah, the euro dollar could be a very interesting little ride there for half an hour or so, or maybe even more. If I doubt the CPI forecast, to be fair. Not that I'm, you know, any economist or any way an expert in these things, but that doesn't seem right to me. Let me have a look at the charts here. We had in, where are we now? March, we had 0.2, as it says. Before that, we had 0.1. Before that, we had minus 0.1. Before that, we had 0. I don't think this is looking too healthy myself. I'm not sure why they're forecasting 0.3. Maybe they're going that, okay, we're on a 1 month up or 2 month, I suppose, upward trend. But I don't know. I think that's a bit of an ambitious forecast myself. And if it were to be a miss to the downside, then yeah, I think you will see the pound rally for sure. The euro is going to depend, of course, exactly on what we've just spoken about. So, but that could be a bit of a bumpy ride there for a while on euro dollar.
Yeah, yeah. Well, we also have, you know, how this could affect the FTSE, and I'm just going to quickly show you the FTSE because it is on the move somewhat. Haven't quite tested the daily pivot, and it may see the daily pivot at some point. But what we do have is the FTSE just starting to create some sort of lower low down here. Sorry, lower low and lower high down here. So this is the time where the FTSE will have a greater chance of drifting down to the weekly pivot. So, you know, let's see if there's enough room there to trade. It's not really. It's only about 24 pips to the downside to trade that. So you could trade it, but it might be still a little bit sticky. But when we look at the probabilities today, the probabilities do actually suggest some downside, around about 40% chance that the stocks will close above its open today. So looks like a potential day for some downside anyway. After the downside has come into play, if it does happen, the weekly pivot does start to look like an attractive place to buy in. And I'll show you why. It's just going to be about timing. That's going to be the big issue with this. Is if the price action comes down early, then it's probably much more likely to bounce before that press conference, and then there might need to be some safety kind of put into place. Sorry, let me just bring this up with the pivots. Might be a bit easier to see. Daily to start with, not daily, sorry, 4 hourly. This is what I want here. Why is that now looking different? There it is. So there's a little trend line that goes along here, which does suggest that the weekly pivot would be the area that would hold up. So we probably have to buy in here. We don't really have too many options to wait, because if we wait, by the time the price action has really told us what's going to happen, it would have gone. Now, if it comes through this level, there will be another buying opportunity in this area here. So so I am looking to see if we can buy into this point. The only way that this wouldn't be bought if it really did take off to the downside, and the only way that's going to happen is if price action doesn't move from this point before the press conference, and then the press conference drives it down. So I would suspect we'll probably get down there fairly early in the picture, and then investors will probably start to buy up again. What would be obviously a lot better is if we start to see some sort of reversal pattern up here. You know, we could start getting something which does suggest some sort of head and shoulders pattern up here as well. But that's huge conjecture and probably unlikely to happen. It would have to come into this area, then back up, and then down again. The good thing about
not interested in the big double top and the bearish engulfing bar. Too early.
Well, do you know what? All that really tells me is that there is weakness in this area, but it doesn't tell me that we're really getting a change of direction. And I think we need to see a genuine pattern, a longer term pattern to change that round. I don't like the IMF forecast, reduction in the global economy. I don't like the fact that we've got this Donald Trump trade war potentially starting up again. But I think it's probably, as you just point out, I think it's just a little bit early for us to start assuming that that things do actually genuinely change here already. So, yes, it would suggest that we may well have reached an exhaustive high. But I still think that we probably, if we do start to come down, I still think there's going to be some appetite for upside. And I think if we buy into this area and it does move to the upside, stops will be moved tight or to break even as soon as possible. And then we'll see if we continue to take off. And if we don't, then it's going to hit our stop and it'll move to the downside. And then we wait for the next possible opportunity. So no, I don't I'm not too worried about this this right now. But yeah, you're right. It does flag up the fact that there could be problems, but we need to see a genuine distribution pattern here for me before you know, anything else. It is a concern. I'll tell you the other thing, mate, is that when it comes down to it, really, I want to hear hard, fast rules and data before I make a decision on a market. But this market has been so overexcited. The moves may well be missed just because it's going to be twitchy up here. So it might not be a hard, fast data release that drives this market down. It might be that there are enough whispers that start to suggest that we're slowing down. We got earnings seasons just around the corner as well, and that might be a driver. And this is I'm really looking to see what the driver is. I don't think we have it yet. ECB's press conference could be it. We haven't really heard anything from Mario Draghi, which has been that unexpected because of forward guidance. There's so many things now that we already kind of have baked in, you know, way ahead. You know, he's already said late 2019 there won't be any kind of interest rate decision. So we know that there's nothing on the euro that's going to drive this. The other thing is the pound. You know, we have some potential news with the pound today as well, with Theresa May meeting in Brussels with the European leaders, and that may well be a driver, because if that becomes a genuine aspect of this market, then the pound will probably strengthen. It's probably very likely to strengthen on the back of a longer extension, and they're talking about up to a year.
Yeah, so I believe. Ouch.
Yeah.
What if she comes away from that meeting and they say no?
Well, we leave on Friday.
All right, that's it. Done.
Yeah.
I've got my fingers crossed.
Yeah. Interestingly, the channel that I didn't notice earlier, but there's a channel here which actually suggests that the move could actually be a little bit deeper. 7,300. We could get a 60 pip move here. It's likely to bounce the weekly pivot, but you know what? It might actually go through it eventually.
Is that measured move hit the top of that that high back in, where is it?
This is just the measured move of the channel. So the actual channel width from the upper line to the lower line, the actual measured move from the breakout brings us down to this area here, which would actually be quite a sensible place to look for the long.
Yep.
Yeah. Actually, some evidence starting to maybe stack up for a little bit lower here. It's just that weekly pivot. I would trade this short, to be honest, if if that weekly pivot wasn't so tight. It's not far away enough for me. I'm going to wait on this and see what happens. I suppose realistically, I'm probably still looking for the long. The one thing about this coming down here is at that point, then we do start to look. Oops. At what could be the head and shoulders being a little bit deeper. You know, that also starts to look like a potential head and shoulders pattern. I'm just going to tidy up these lines so you can see them a bit easier. Let's get rid of this one. That's what could happen. So we could be looking at trading this long into this area here, and then maybe taking some profit at that point and seeing if it continues to the upside. Because if it doesn't, that could be the genuine time to go short. So this is maybe another reason that maybe the shorts are a little bit early. You know, maybe we can retrace down here a little bit further, but then we start to look at the long. But then this short will probably be into, well, it's still in April. I mean, if April ends up being bearish, that is going to be really telling for this market, because April does tend to be a really strong month, and And if you have anything to look at, if you're looking at anything specific, then I'm just going to do some bits and pieces here in the background just to see if I can see what that does actually suggest for the market on the whole. If April is a bad month, because 70% of them are positive, you know.
Yep. Yeah. Look, I've got plenty to look at. In fact, I'm probably going to be one outs today, I would think, because everyone's kind of buying the euro or wanting to buy the euro. I don't see that today. I see that as a sell today. Having said that, away she goes. What I see is this monthly pivot. Of course, if that goes, then all bets are off. But at this point in time, look where that is. Look where that stopped. If that were to stop there, it's an absolute obvious right shoulder. If it goes through that level, of course, and through the monthly pivot, as I say, all bets are off. But when I look at the daily chart this morning, I thought, oh my goodness, really? Why wouldn't I go short on that? And of course, I have placed an order short just underneath here, about 5 pips underneath the low. I don't see any reason not to maintain that stance until the monthly pivot does go. So that's where I'm at with the euro. I was a bull yesterday, but couldn't find my way in. And I'm really not suggesting that we're going short again, but gee whiz, this looks like a channel forming to me. I'll put that on there for you so you guys can see it. So I'm kind of thinking here type of stuff, or maybe here, and we'll give it a chance to break through this level. There's not a lot on offer here in terms of reward, but what I'm seeing here is compelling evidence that there may be a little bit of a downside today, maybe to the weekly pivot. Wouldn't want to be trading much past there probably, but that's what I'm seeing on the euro. So I do have an order in the market if you're interested in following it. The entry is at 1.1249. It's a short, and we've got a 37 pip stop loss. We're going to take profit very early, and the reason is I don't want to trade through this, which was essentially the neckline on an inverted head and shoulders that is yet to retest that neckline. And there's another reason I'm just short-term bearish here. I'd like to see a retest of this broken neckline before getting into the longs. So, a lot happening there for me to be convinced that there's a little bit of downside here today. Again, if it goes and breaks the monthly pivot, then all bets are off. More evidence of that is in the other crosses as well, in particular Euro CAD, where I've got another order short, and I'm citing this double top here, followed up by this lower high, again underneath the monthly pivot. And again, if the monthly pivot goes, then I cancel this order as well. But whilst ever we're under the influence of this double top, the big bearish engulfing bar, now a lower high, I see that as a potential short. And you can see where I've got my second take profit. I think that's quite fair. First take profits here. I'm going to get a third of the trade off the table at that point. And then I'll just move my stops to entry when we get to here and see if we can go through the lows. But actually, I'm not a massive Fibbo fan, but if you pull a fib on that, the 50 bounce is kind of there, and now it's backing off the backside of the 382. I suppose that's there as well. There's a real case for me for shorts euro today, and I'm not talking massive moves. I'm just talking little ones. Euro yen is another, and why I'm saying that is euro yen has put in, call it double top, call it what you want, broken through the rising trend line or bullish trend line, now testing the backside of it at a confluence area. I think this is almost a trade even, but the monthly pivot's a bit of an issue. and the pivot's been very close together, tends to suggest that we're not going too far away from here. And of course, we've got to remember that we have all of this euro news coming up today as well. So getting into the market is a little bit tricky. But again, everything I'm seeing is suggesting that there's short-term downside for the euro today. Euro pound is absolutely no different. We're coming off resistance, and I'd be looking for a lower high here. It's not there yet, but if it comes, then I'd be looking at that. The one exception is Euro Aussie. Euro Aussie is at support, so it's kind of tough for me to be saying that we're going short the Euro Aussie. That said, we've broken the bottom of the channel, and now, not channel, the rectangle, which of course is my consolidation area. And now we're finding it very, very difficult to get back above there. So there probably is a case for me to be saying we're hitting the backside of support, and therefore it's become resistance. The pivots are involved there as well, the daily and the weekly pivot. So really, I can't think long the euro today at all. Again, if the monthly pivot goes on the euro, euro CAD, euro yen, then I've probably got a different outlook. But at this point in time, really can only see euro selling. Of course, the news will have a lot to say about that as well. If I can get in the market in the next little bit, then I'll see if I can do that. And I'd like to be free trading when those news events come around. But there's no entry here for me at the moment. But that really is looking like a potential shoulder here, in my humble opinion. What did you find out, mate?
It doesn't really figure, actually. There's a couple here, but it doesn't really give us a decent read, and the platform doesn't go back far enough to give us decent data on that. But I suppose what it would suggest, is that May tends to be a little bit of a 50-50 month, but then the summer months do tend to be a little bit weaker, generally speaking. If we look at June.
Do you think that's a reason why you would tend to see a stronger market in April? Because the market in general realizes and recognizes that the old adage, sell in May and stay away, is on the cusp. It's coming, so we might as well be buying into this and then do exactly as the rule says, sell.
Possibly. I mean, I think what it really comes down to is that there are specific tax breaks. I mean, the UK's tax year tends to run between April and April, and the reason I say tends to is that, of course, you can choose when your own tax year runs. But we're in the UK. The taxman tends to start collecting around about April time. So January time, and then you get the new tax year in April. So I think it's probably got more to do with the fact that the tax has been settled at that time, and then there's new and fresh money to invest. So that's why I think probably April is the time that a lot of it gets done, and maybe when it gets to May and June, the selling May thing probably comes in, because probably a lot of the business has probably been done. They probably try and get their business done early in the tax year, and then they're probably not buying so many. I'm not sure whether it is so much sell in many occasions, as in there's not so much buying that goes on. So yeah. So I think there's a bit of a slowdown. There tends to be a slowdown during the summer months. But yeah, I think it's probably more to do with tax than anything else in the UK. I mean, this is the thing. Everything that the investors decide is all going to be money related, isn't it? And this is the reason that I think you see it in December. This is one of the reasons I think you see it in December. The Santa rally.
Yeah.
I think the tax year in the States, from my knowledge, is the end of December. So. So that's another kind of reason that probably tends to change things up a bit as well.
Okay. I've only looked at the euro pairs, and again, I can't see any reason why the euro is going to rally today, but outside of news, of course. Let's have a look at the pound and the Aussie, shall we?
Yes, we do want to look at the pound and the Aussie. FTSE 100 is starting to move into the downside now. Not that unexpected, I don't think. Yeah, let's look at the pound and the Aussie, and also look at the let's look at the Aussie CAD as well, because that was a market that I've been looking at for a few days now, which hasn't really resulted in anything positive. But I don't want to ignore that one, because I still think there's a
might be
chance that that's
working up to a good price for you, mate.
what's that, the
The
FTSE?
Aussie CAD. No, it might
Oh,
be
the Aussie
working its
CAD.
way up to a nice selling price.
Yeah, quite possibly, quite possibly. Let's have a look at that one.
Yeah, look, if I look at cable as I am, it really is in the land of nobody, as one of my former associates used to say. I call it no man's land, and the reason I say that is because we're dead set between a resistance area and a support area, and you can even tighten that up further if you wanted to by coming down here. You know, it really is at the pointy end of the pencil, which means, of course, that it will break from here. There's no doubt in my mind about that. But choosing that direction on a day such as this is really tantamount to a real gamble. And I'm of the opinion that it's probably best left alone until we get all of the upcoming news out of the way. We've got an hour and 25 minutes before the first lot, which is the GDP figures, and GDP figures have been, as we've spoken, have been forecast as not good, and that would be probably in line with most of the world's economies at the moment. So you'd kind of expect that, and I think, as I said yesterday, that's why we haven't seen the pound rally as much as the euro. Well, the euro didn't yesterday either, but the Aussie is kind of on a tear and still going that way. So I think it's best left alone, to be absolutely frank, and it's pretty much a toss of a coin. If the numbers are right, then I don't think the pound will do too much on the GDP figure. But if they're wrong and there's even a par or better, then I think you're going to see the pound rally very quickly. And I don't think there'll be an opportunity to trade it, to be fair. So it's a bit of a quandary for me. Thoughts, mate?
Yeah, I think the pound is going to rally off the back of an announcement from the ECB. Sorry, not the ECB, the EU. I think that we have that decision today, which seems to me like it's going to be offered for a year. And let's have a think about what that means as well. So this is the pound.
Is there a time on
that? When the announcement will be made?
Yeah.
Not. There probably is, but I don't have it. I mean, there's a summit today. I suppose summits can just be can go on for as long as they like. So maybe not. I don't have any specific time that I've been made aware of. And I have been on top of the news, and I just not because I don't think I've been on top of it. I just don't think it's been announced.
Yep.
So it may well be. Let me just see if I. No, it hasn't really been announced from what I've seen anyway. From where I get my data from, I haven't got an announcement on the actual release of that yet. So let's have a look at what.
Let's go through the possibilities. I mean, there's probably two possibilities. They'll say yes, you can have an extension, or they'll say no, you can't.
There's three possibilities actually. Right, okay. Yeah, and the three would be, in fact, two possibilities with one of them having an A/B. I guess optionality to it. So the first possibility, as you say, is going to be extension, and the second possibility is no extension. The second possibility is unlikely, and that would mean that we crash out on Friday. The first possibility is much more likely, and I think that's going to be then down to what kind of extension do they grant. Do they grant it until June? Do they grant it until the end of the year? Now, what I've been told is that Theresa May is going to ask until June, but the EU want the extension to be longer than that, and they're looking more towards December potentially, and possibly beyond, with a flexible leaving period as well. You know, the UK, if they can ratify whatever it is they can in Parliament, then they will be able to leave earlier. But it's certainly looking like it could get pushed back to December.
Well, if they're saying that if the euro is saying that it should be longer, then you would suggest that they've come to some decision amongst themselves that the whole lot of them are going to say yes.
I agree, and this is the thing, is that the European Union hold the cards. You know, the UK government really
They've been gifted the pack, haven't they? Really,
they really have. Yeah, they really have. You know, and it's so interesting because I don't know exactly why the EU are being so so gracious, if you like, or so quite willing to bend on this, because there are a few different reasons for it. The first reason could be that they just don't want they want the UK to be as close as they possibly can, because they understand and realise the importance of the UK economy for the European Union economy. The second thing could be because they are hoping that if they can kick it down the road long enough, that the UK and British people get another chance to vote and they turn around their decision. And the third possible reason is because they've got such a good deal on the table for themselves that they want this to have as much time and possibility to go through. Now, I don't know which it is. It's probably maybe even a combination of all of them, because there's 27 countries, so I'm sure they all have their slightly different reasons for it. But if it's the latter, then I don't know why we would want to take that deal. You know, if they're licking their lips because they've got such a good deal out of the UK, that doesn't really promote Theresa May's deal with any kind of excitement. It will strengthen the pound just because there's a deal, but I don't think the deal is better than staying in the EU. So I don't know. We'll see what happens, but it does suggest that if the matter is kicked down the road, that the pound will much more likely have the opportunity to strengthen rather than weaken. And the reason I say that is that the protection that people would have put in place would be with the consideration of April the 12th. It would be in consideration of Friday.
Mm-hmm.
So if people have got protection in place, the protection they would have got in place, you know, firms in the UK I'm talking about, the protection that they would have got in place would have been to the downside. They'd have some downside protection. So you know, if there was any problems in the UK economy, so they weren't able to make the profits, they would somehow try and balance it and hedge it out by having the sell orders in the pound or the puts in the pound. Now, if they don't need that protection until December, those are going to come straight off. So if protection gets taken off, there's just going to be nobody here to sell into. So this is the reason that I think we may well see a significant rally if the extension is granted today, and the extension is a long one. Because not that all of a sudden people get confident, the UK, but I just think that they probably start going, fine, we don't need this in place, let's take it off the table and wait to fight another day later down the road.
Interesting. I think that makes perfect sense. Yeah, like it.
Yeah. So and you know, this is the thing. What you know, the kind of the thing that's the things that go on in the background are sometimes so complex. You know, they have such complexities. They're quite simple when you know them, I suppose. You know, and we don't. You know, we're just not party to the information. I haven't got a clue. You know, what decisions have been made, or what companies have got specific orders in the market, and why they sit there. But I do know that that these decisions are, you know, more often than not have many different reasons and permutations to it. You know, the pound going up in value affects everything. And this is the thing, you know, we've got such a globalized market, whereas before each market would probably be, and even each currency would probably be slightly more isolated. You know, if the global economy does badly, everybody buys the yen. And there's kind of two reasons for that. You know, the yen tends to be a surplus economy. You know, they tend to provide a trade surplus, and also because they have assets. You know, they own kind of a lot of foreign assets. But you know, as prices change, then and globalization happens, you see other people going out and buying. You know, other countries going out and buying assets in other countries as well. In you know, one country going to buy assets of other countries more than they have done before. So the protection that they would have got from the yen wouldn't be as prevalent. You know, it would still be there in a real tanking scenario, but it wouldn't be as prevalent as globalization happens. Before, it was if the United States got a cough, everybody get a cold, and now it's China. You know, everything's starting to get so much more interlinked, and you can literally go back and go, German production is bad. That links to China, you know, because of the way that people buy goods now. So the you know the global economy has really changed, and it is really changing. And I guess this is what creates such a low volatility environment. You know, it's you know, everybody's kind of almost singing from the same hymn sheet when it comes down to the globe. So it makes decisions that little bit well, it may be easier or trickier. I'm not sure, but certainly the benefits of those aspects probably start to get diminished. I mean, forget in a way the robot trading that everybody's fearing, but for the lack of volatility, globalization is also having the same effect.
Sorry, mate. I'm reading the statement from the RBA 2IC.
Yeah.
And wondering why the Aussies have been rallying. That's why I've been reading that.
Oh, okay. And what do we come up with?
Well, there's a whole different scope of things in here. But he's certainly not terribly dovish. That's for sure.
Okay.
He's talking growth up rather than down, admitting that there's a global trend, of course, but it's too long to actually get a
read quickly.
I can't. But certainly the market hasn't thought it was a bad one. It's rallied about 35 pips since that was released, or on that release on the 4-hour chart anyway. So it's taking on the high of yesterday. One would suggest that on that positive news, we'd probably see 71.60 odd and match the highs of what, March. Yeah, so we'll see.
Okay. Yeah, that's something that was going to be driving this Aussie CAD then, right?
Yeah, look, it was something that I was looking at, the Aussie in particular, as a short, and almost ready to pull the trigger. Actually, all it would have been required here is for that candle or that candle to have been bullish and decisive, and I would have pulled the trigger here and got my my bum kicked.
Yeah,
well and truly. So I'm grateful that that they weren't either of those things on the 4-hour chart. Aussie CAD, you want to look at that, right?
Yeah, let's have a look. Yeah.
Well, because of that statement, we've now seen Aussie CAD come off the pivots, and it's been hanging around those pivots for a little bit, as you can see here.
Yeah.
And same as the Aussie, it's headed for a trend line and a DR3, believe it or not, and also may even look to take on these highs. I can't see that, to be fair, but on the back of this statement, you can definitely see that we've had a change of heart, and where we were considering going short here, as we were, I think that might have changed a little bit.
Yeah, yeah. But certainly for right now, it was interesting, wasn't it? Actually, because yesterday was looking really Well, not really bearish, but it did have some decent price action to the downside, but it would have needed to close. I think we both said anyway that closing beneath the pivots was really going to be the ideal scenario when
Yeah,
it
that was
came down to
important.
the Aussie.
Yeah, for me, the real trick is to get back inside this. What now really is over and done, I suppose, because we've had too much price action up here. But I think always I'm looking for this range to be re-entered and then looking for the lower high before I go short. But this one's different now because as we come to resistance, and I'll go to the daily chart, as we come to resistance, you can see it's fairly substantial resistance. I'd be looking to play this as a false break. I think we're still in lower high territory. We can't really say we're in lower low territory. Probably go to the weekly chart and find that that's the case, but that's not what we're looking for. We're looking for an entry here. So I'll have a look at that, definitely. If we break here and find that resistance, get back underneath here, then that may get me interested again. But for now, it's
when the Aussie CAD.
Yeah, it's kind of wait and see. I think I'm more interested in Euro CAD than Aussie CAD, and therefore that's why I've got an order. But you can see we're getting inside bar after inside bar on that cross. That would tend to suggest that we're waiting for the ECB press conference.
Yeah.
And I don't think, look, I don't know. It's kind of looking like a breakout trade to me. But I don't know. I'm kind of tossing that up. But I don't know that I don't know that we're going to have enough strength in the reaction. Depends what said, of course. If it were a number, I think I'd be interested here, but it's not a number. It's a press conference. So that makes it very, very difficult to trade a breakout because you've got the potential for whipsaw to take you both in and out very, very quickly.
It's difficult, isn't it? Because you kind of know what Draghi's going to say to a degree with the euro. You know he's not going to raise interest rates. You know he's going to say that there's tailwinds from the global market. But last time the rally really kind of started off the back of Draghi saying that the outlook wasn't as bad as they first thought. They expect the outlook to be a medium-term outlook rather than anything longer term. So that's going to be, I think that's going to be the point, isn't it? When he starts to talk about, when will this end? If they push him on when will we start to see growth come back in? If he again reiterates that that the growth is is just round the corner, then I suspect we'll probably see something quite bullish with the markets and the euro. But if he's a bit more dovish on that, then that's probably the driver for some downside on the euro.
Yeah, look, again, when I look at this chart, I just cannot make a case today, and I'm not talking in general, I'm just saying today, I cannot make a case for me trading this long. I can only see shorts. I can see the monthly pivot, no close above it, rejection of it. I can see a false break of this resistance trend line now being retested at a confluence area. I see an untested or retested or back tested, as you would call it, neckline after the break. I'm seeing all sorts of things that are suggesting to me that I can't go long. I'm not saying it won't go long or can't go long, but I'm saying I can't trade it long. The only way I can trade this right now is short.
Yeah. Yeah, it's a. I mean, I think we got to wait. I think we got to wait for that. Not different for you, obviously, but I think to my mind, I'd like to wait. I still like the long personally. I mean, I'll show everybody that as well because I do have a slightly different outlook on this one. It's a bit early to be getting into the long, but I really like the euro and I'd love it to come down to this point down here. So somewhere around about the 112.50, between 112.50 and 112.45. I'd really like it. Head and shoulders pattern is playing out though, isn't it, mate? That's the one thing that you were discussing earlier on.
So far.
Interesting that we've seen the daily pivots taken out in the manner that it has, but there is some resistance up here, resistance along the neck, sorry, on the head, and there's some resistance on the left shoulder as well. So quite an obvious place that that the market will start to move to the downside again.
Yeah, I'm going to throw you a curveball here.
Okay.
If that candle closes below the daily pivot,
yeah,
what do you think I'll do?
Oh, you're going short at that point.
No, I'm not. I'm going long.
Oh, you go long. You did throw me a curveball.
Yeah, that's what I said. It'll be a curveball, but it has to close below the daily pivot. In fact, if it engulfed the bar, better still. If I had a bearish engulfing bar here, then yeah, I'm definitely trading this long. Crazy, eh?
Yeah. Yeah.
Do you want to know why?
Yeah.
Well, it's cause and effect. It's not predicting for 1 second that the market's going to go long, but what it is saying is if the bears are not strong enough here to force this market down and go through the neckline, then the bulls are really in charge, and they're going to take on the high. They're going to take on the high. So I've got to take profit here, of course, but that will be my stance. And if I'm wrong, well, I don't see it as being wrong. I see it as if the market chooses not to go there, let's put it that way, then it should go. Then it should go short and break the neckline, and therefore play the head and shoulders. So that's kind of my rationale.
So, but you often use the pivots as your area for that, don't you?
Always.
Yeah, always. Okay, so the question I was going to ask then on that front is that with the rationale of the pivots, I suppose the reason that the pivots are used is because they're an obvious area for support and resistance and an obvious area for trading. But actually, the rationale would still work if you got a trend line, right? Same kind of thing. If the market is unable to push through, let's say this area. Have you got my chart up?
Yep.
Okay, so let's say this area here, the market pushes higher and then pushes lower. So you would be looking at, I mean, I know in fact, I can't really do it with pivots. It's better if you do it with a clean chart.
Yes.
You are looking at the break. Yeah, the break. Maybe this area would be, yeah, let's say this. The market breaks to the upside here. And then you get the downside. Now, surely the order goes in there, because if the market is unable to push it down further, then you're looking for the bulls to take out the highs.
Yes, except there's other things in play there. I'm always looking at context as well, and the context of that trade would be that the market started that day some whatever pips it is away. Was it 60 pips or something like that? 60 pips. I wouldn't be looking to extend that any further, especially with the monthly pivot dead ahead.
Yeah.
So the rationale then becomes, well, okay, it's gone that far today. Why would it go any further?
Yeah.
Without consolidation or retracement, which is exactly what happened, of course.
Yeah.
And that let me measure that. In fact, while we're here, that day, 2 days ago, it's 64 pips, 65 pips. So immediately then, if I don't know out of the top of my head, I then go to the ATR straight away.
Yeah.
And the ATR on the Aussie, I would be surprised if it's anywhere over that. In fact, let's have a look. Why not? Indicators, average true range. I have to go to the daily chart, of course. Hang on 2 secs. Daily chart. Insert indicators, average true range. We'll go back, a month, 20 days? 20 days, and the ATR over the last 20 days has been 52 pips. So that immediately tells me that if we've got a market that's just moved 65 pips, I ain't going to go long.
Yeah. Yeah. I get it, mate. I get it. Yeah, so there's a bit of maths involved as well.
Yeah, look, that one's an easy one to forget, but if you see a market go from its absolute bottom to a high or match a high or just short of a high, there's just no way I can trade that. Wait for the dip and then go, yes, most definitely. But you've really got to expect that after a big move in the market, you're going to have one of two things. You're going to have consolidation or you're going to have retracement, because the market very, very, very seldom goes beyond its ATR, I'll put it that way, and continues before retracement or consolidation. So I think I learned that, many, many moons ago. Forgot it a few times, of course, but it's very much a case. I don't forget it ever anymore, and I don't trade a market that's just had a long rally. Certainly not.
Interesting. I see. I see. I mean, it's interesting because of the way that you understand the philosophy of what's going on the chart. If this doesn't happen, that must happen, kind of. It's kind of quite a nice binary way to look at it in a way, isn't it?
Yeah, it's kind of a different way to trade, and I've been always of the mind that I don't want to be going in the same direction as everyone else. I'm kind of, and I guess that's a life thing. It's kind of my philosophy. I don't want to jump over cliffs with other people. If I jump over the cliff, then I want it to be on my own terms. If you know what I mean. So that's always been the way. But if I see the market moving so violently in a direction, it's the last place I want to be going until there's some sort of equilibrium come into play, because it just does that. It's very much a case you can look at every single day, and it's easy to do after the event. If you go back and have a look and you see a rally that's just gone nuts, just have a look at how many times it actually broke the ATR, and you'll find very, very rarely that's the case.
Yeah,
it might be 1 pip, 2 pips, 5 pips, 10 pips, but gee whiz, it's rarely the case that it'll go beyond its ATR.
Yeah. Well, the FTSE is just a little bit frozen up here. I mean, I was just going to say about the euro actually that there is another trend line down here. I would like the euro for just a little short-term short down here. Get the press conference out the way, and then see if there's any longs on. But let's have a look at the euro a little bit more later on. Just quickly back to the FTSE, unless you got anything pending, have you, mate?
I'll just have a quick squiz at the 30-minute charts, if you like.
Yeah, let's do that.
All right. We've got new candles, of course. So let's take a squiz around. We'll start with the euro. We didn't get that bearish decisive bar that I was looking for, but that's still maybe there on the hourly chart. So there's still maybe a trade here for me, but it's not there right now. Hang on, I'll get rid of this ATR. There we go. Euro CAD. Still got that 4-hour short in play. The order, that is. I'm not short yet. It's not really a market that's suggesting. Well, maybe it is. Hang on a sec. Yeah, it's a bit steep. I could probably run that across here and get away with it. Okay, so really we're still an untested daily pivot here. My bias is short. I see a break and retest here, so I'm thinking long to the monthly pivot, but trading straight into resistance. Counter my bias? No, is the obvious answer. Euro yen. That's really close to a trade right there on the hourly chart. What's the 30-minute chart saying? Not really. Gee, I like that though, Ash. I really like it.
You like the euro yen?
Yeah, break, retest the trend line at a confluence area, bang on the daily pivot. It's a scalp, if nothing else,
Yeah. So you'd want to go long above that?
No. No, this is a short one.
Oh, okay.
because it hasn't broken the daily pivot. So it would
Right.
have to have broken the daily pivot, then re-break the daily pivot,
I
and
see.
that becomes cause and effect. It still could be cause and effect, but it's too dangerous to trade here because there hasn't been a close above.
Yeah.
So I can't do that. Not saying it won't go, but it's too dangerous a trade to take.
Mm.
If this candle were to be a bearish decisive bar, which for all intents and purposes it looks as though it wants to, that would give me a bit of a glint in the eye. But I've been burnt too many times trying to trade long under these circumstances, and for that reason I'll stay out. But the hourly charts. Can't get out of my mind, but there's no trade there for me really at the moment. So still looking for a lower. That's the 4-hour chart. Goodness me. Whew. They keep giving me these halfies.
Mm.
So I'm actually looking for a lower high here, but I want it to be a high. I don't want it to be a consolidation area. I want the market to have come down, found support, then go up and find resistance. That resistance is here.
Yeah.
Again, a shoulder line. So, here's where I want to get short, not here. So I'll have to wait on that one as well. And of course, the market could be in an entirely different place where by the time they set up. Wow. Oh, that's the Aussie rally, wasn't it? Yeah, that's Euro Aussie. Okay, that'll please PH. He's still in the short. Nothing there for me at all. The Aussie's
P-
struggling to get. Sorry, mate.
PH is in the Euro Aussie short. Oh yeah, of course he took that a daily wave ride, didn't he?
Weeks ago, he
Yeah, I
he
remember that.
he took that round about the same time as I took the Euro short. I'm now out, of course. My trails have been stopped out, but he's still in his. Yeah.
Nice work.
That looks very much like a change of direction is pending here, or certainly consolidation, as I've just discussed. Maybe there's a case for a dip down to here somewhere on the Aussie itself. Again, you can't really see it going through that level today. I'm not saying it can't, but only 40 pips, so that's not out of the question. But you'd really want to see a bit of a dip here, wouldn't you, before you took on those highs, I would have thought. Cable, yeah, look, I think under different circumstances, I'd be a fan here. But and which direction is not obvious to me right now, I've got to say, on the 30-minute chart. But I'm not a fan because of the pending news and, pardon me, the fact that we're in no man's land. This is Aussie yen, and again, the move has been too great. We need to have consolidation or retracement. Aussie CAD, we've spoken about Aussie CAD at length, and DR2 matching these closes, I suppose, just about. Not quite. Again, you'd be expecting consolidation or retracement, and I've got no news there. The last one I'm going to look at is dollar yen, and the reason I want to look at dollar yen is because I can't find a way in. It's giving me the willies, actually. Certainly doing as we suggested it might, and that is head short, but getting into that trade just so hard. So hard. That was the
Dolly
candle
yen.
there.
Oh yeah, we were talking about that one, weren't we?
That was the one right there.
I was just considering putting an. Let me do the order in a minute. Look at the dollar yen.
See, if you have a look at this, right? Have a look at this candle here, which is the trading candle. That's where it should have been traded, without
Yeah.
question. And then have a look at.
Oh yeah, we were discussing this. Yeah, yeah.
Is it the euro or the? No, what cross is it? Euro CAD. Damn. I can't find it now. What cross was it? If you got a trade, mate, take it and I'll find this. Oh, there it is. Euro yen. Look at euro yen.
Yeah, euro yen.
Same scenario. Dollar yen.
Yeah.
Break, retest. Euro yen. Break, retest. At confluence. And dollar yen. Not the daily pivot, kind of, but there's definitely a horizontal level there as well. So there's something to be read into that, I think. Euro yen.
That is interesting, actually, isn't it? And I wonder what that's the. So the euro yen. So the protection's coming in here, isn't it? This could be actually a bit of a soft marker for some market.
But right now we've got what 40 minutes to go, or 50 minutes to go, and we've got news. So, oh, no, it's pound news though. It's still tough to be trading right now on the euro and the pound.
Yeah, probably wait for that press conference and then we can take something. I was about to put an order in the market. I know I didn't. Let me just quickly check that dollar yen is again. You see, the yen has strengthened off the back of more potential global weakness, and I don't really want to be buying the FTSE on more global weakness, but by the same token, we are in a pretty strong bull market. What I was about to do was oops. To make sure my screen's coming on here. I was just about to put an order in at the weekly pivot for a long.
Limit order. Yep.
Yes, so I was going to just do a quick buy limit down there. The picture on the FTSE is I might do that actually. I think it'd be okay. So let's have a look. This is the weekly chart, and this is why the FTSE's really hanging on here and working its working its arse off to stay above this level, because it's a break, and really this is the retest area. Really interesting retest area that's going on. It's holding out. It might be that that we get something of a weakened bar this week. It might be that we don't really get much movement this week, and it's next week we look for. I mean, there is a slew of data, so I would suspect we'd get something. But what could be interesting here is if we close below. In fact, this is a good example of what we were talking about earlier. A close below this trend line here.
Yep.
Would that encourage you to look for the long?
Yes, it would.
Yeah. So that's what could happen here. We may well start to see this particular area give way, but we do need to see the close down here, and then things start to get a little bit more interesting. I think the weekly pivot is okay. I think it's an all right place to look for the long. It's a bit higher than the analysis that we've just done has suggested. The analysis suggests that we would come down quite a bit further before going long, but I think we might well miss it here. So let's just go in light at this particular point and see whether we can put this on. So we're really looking at 73.34, 73.36 actually. So yours is going to be slightly different to mine, but I'm looking at around about 30 pips below. So you're probably looking at something like 7,400 for the long to come into play. So that order's in the market now anyway, mate. So I'm going to take the trade if it comes down to this point. And then the management of that will be dependent on what happens. If it bounces, then I'll probably tuck things in fairly quickly if I can. I'm just doubting the rally a little bit up here. but the technical level is too strong to ignore. So I've put it in because of the technical level, but I am doubting the rally somewhat. Market's frozen down a little bit, actually. You know, when we look at this on shorter term time frames, this is the first 15-minute bar of the day. This is the second, and it's just, you know, it hasn't actually closed too far above its open on any of the first two 15-minute bars of the day, and this is the first one where, well, it hasn't closed yet. Let's see what happens. But this may well be the first one where we actually get any kind of body whatsoever. But it certainly looks weaker here.
The third doji in a row as well.
Yeah, it could, and really that it's looking like it's going to. But that in itself kind of provides information, and it does tell you that there's that the market is indecisive, which is another reason.
News coming, doesn't it?
It does. Yes, it does. Yes, it does. I mean, it certainly it looks by all intents and purposes that it's much more likely to sell. Whether it sells into the news or after the news, I don't know. I will take that order out the market if the news hasn't happened, if the news is about to happen. Sorry. So that's going to stay there for a couple of hours. But if there is if news is imminent, then I will take it out of the market. The one thing that might be happening here is that those GDP numbers that you were discussing earlier from the pound might well be the first data point to wait for, and then we start to see a little bit of easing. But yeah, before the press conference. So we could be waiting for another 45 minutes, really. I'm certainly much more, I suppose, micro term bearish than I am bullish. I'll be looking for the short here because I want it to come down to that weekly pivot. But the weekly pivot looks like a decent place to attempt to buy.
Okay, that's fairly clear. I'll do a bit of a wrap of what I've got before we look to the top of the hour. And this euro dollar is actually setting up. Am I still with you, Ash?
Yes, mate. Yeah.
There's something weird going on here.
Yeah, I can still hear you. I'm presuming
I've got the blue circle of death.
Oh, hold on. Let me just. You gone? Jeff's gone. Right, now this happened yesterday, so we're likely to lose the show. Actually, that's what happened yesterday, isn't it? We lost the show altogether.
Am I gone?
Oh no, you're back now.
Oh dear. Maybe it's just my monitor. I've got one monitor that's dead. If I click out of it, though, it's likely to kill you guys. So I'll just put up with it, and you'll have to, if possible, give me the screen.
Okay. You've actually got the screen.
Have I?
Yeah.
Okay. So on the YouTube channel, all I see is the logo. Now
yes.
I see your screen.
Yeah. So you are the logo at the minute.
Oh, am I?
Yes.
Okay.
Just while that's going on, market breadth is currently at 53% bullish. So nothing really between it going on right now. So 53% bullish. There's a couple of that are flat, which makes 45% of stocks bearish right now. So no real telling factor that would suggest that we are going anywhere at this current stage. Certainly barometers don't really point anywhere. The first 3 15-minute bars of the day don't point anywhere. The market's probabilities are that we close below the open today, and that would mean closing below 73.50. So down about 12 pips from where we are now, and anything below the 12 pips would constitute a close below its open. So we might well see that today. If we are to close below the open and we only see the market starting to move on the news, that would suggest that close may well be a bit more significant. I'd love to see this market down 90 or so pips from this point, and if it was, then I would be all over the buying. One other aspect, actually, I'm not sure if you're either still with us, Jeff, or not.
Yeah, I can hear me.
Okay, great. One other aspect is that look at this this pattern here. I'm going to blow this up a little bit. We discussed the double tops and everything else. And if we look at that in context of a bigger chart, this 3-bar pattern here. Where's it gone? Here, this is a bit of a signal here, and it's a pretty good one as well. Actually, I mean, you don't often see such good examples of. Where's he gone now? Such good examples of the evening star, but that's a really nice evening star. It's not quite the gap to the upside, but it is pretty sure there is a gap there. So there's a little gap there, and could have done with a gap to the downside, but that's not a big hassle. But the fact that we closed more than 2/3 into the first bar does suggest that that the weakness up here is maybe a bit more significant than we've had prior to that. In saying that, this particular thing happened, and we rallied from that point. So you never really know. The only one aspect of this is that it was rallying from support, so it wasn't. It's not completely the same. You know, the context of this one does suggest that it could push higher, but this one hasn't really kind of hit any price action support as yet. So there is a suggestion that there could be some further weakness down here, but we'll obviously still just waiting it out. And also, we have to take into account that this daily pivot is still in play up here, and I still like this daily pivot for the area to look for the market to come down from. Not suggesting by any stretch that we should sell this at this point, but that would suggest to me that the daily pivot will take us down to the weekly pivot. So I'll be looking for a move from here down to here in the next period or so. Sorry, mate, I wasn't really cutting you off. I was just making sure that you were ready.
No drama. I can't show you my screen unless you can throw it my way, but there's something weird going on.
Oh, okay.
On my PC. I've got my screen, but I don't think I could share it with you.
No, I don't think we. No, because you are the ATW sign now. Because when you talk, it starts to pulse a little bit.
I feel very strange as a sign, but never mind. If you can
like
put
print.
the euro dollar 1 hour chart up, I can talk through that. That's probably
Okay.
the way to handle this.
It's there.
Okay. So
this isn't going to work.
No.
I don't think. We'll try it, but I've got a feeling every time you talk, it's going to go back to you. This is the problem with this YouTube thing. Yeah.
Yeah.
It's not going to work.
Gracious. Okay.
You can give us a general synopsis, and we'll see if I can wrap it for you. You were, I guess, going to say that if we get the close beneath the daily pivot, then you'll be looking for a long above the previous bar.
Yes, that's right. And you would have to, it's absolutely compulsory to take profit. I'll give you the level that profit has to be taken at. It is 112.77.
So just before the monthly pivot.
Yep. So you're going to have a risk of about. This is a poor reward to risk trade, by the way. But and the candle has to close below the daily pivot. Maybe we can eke that out to 112.78. Actually, yeah, 112.78, which will give you only about 5 pips of profit by the time your spreads have gobbled up a bit. But you have to do that. Otherwise, don't take the trade. It's too dangerous to go through that level. So that would be that. You can leave. What I would suggest is take half off at that point and then move your stops to 5 pips below your entry. So therefore making it safe. And you couldn't lose at that point. That would probably bring you around about the daily pivot level anyway. So that would be the course of action I would take. I'm not going to change my position on the daily chart. The daily chart, I've got a short on euro dollar at 112.49. I'm going to leave that in. Yeah, 112.49. Stop loss is 37 pips above that. And I'm going to take profit again very quickly at 112.34. I'm going to take a third off at that point. And then I'll just micromanage the rest of that from there. That's euro dollar. So I'm potentially long on the hourly and definitely short on the daily. The other one I really want to pay particular attention to is euro yen 4-hour chart. Now the euro yen 4-hour chart is going to be.
I'm just going to show people these levels because obviously while you're talking, they haven't seen my screen. So these are the levels that Jeff's talking about. He's talking about taking a profit just before this monthly pivot. So trading just above this candle here and taking profit just above the monthly pivot on the intraday. And on the daily, he's looking to go short below this this yellow line, which is 112.49, and taking first profit at 112.34. And with a 37 pip stop loss, so that just puts you just above this this monthly pivot at 112.86.
Yep.
Okay, and the euro yen.
Euro yen. Now this is going to be again a little bit tricky because we've got a euro dollar short. And it's going to be very, very similar levels, I would think. So you've got to balance out your risk here. Euro yen 4-hour, it'll be short as again, but it's providing the current bar is bullish and decisive.
Okay.
So if you just want to have a look at that, Ash.
Yeah. So we're looking at this particular bar here, and we're bullish and decisive and closing above the daily pivot.
No, not necessarily. As long as it's bullish and decisive, it's okay.
Okay.
Because it's already retested the trend line at the confluence, so that's why I'm interested in it.
So any close from where we are now to the daily pivot, you'd consider that bullish and decisive.
Yep.
Yep. Okay.
So the entry will be below that. Actually, the entry will be below the candle before it. And the entry is going to be at 125. 125. Oh, it's a tricky level. Make the entry 124.98.
124.98. And at this point, you're selling.
Yep. And the stop is going to depend on where this candle closes. We've got 3 minutes. At the moment, the stop will be at 125.35. Don't think that'll change. You want to show that one, mate?
Yeah, I'm just putting these in. So we got sure your red line just stopped. Actually, I'll break it up a little bit. Red line's a stop, yeah. So we got entry here. So we're looking for a short if this candle ends up looking pretty much as we do. And we are looking to enter short at 124.98 with a stop at 125.35. Take profit.
First take profit level will be at 124.87.
That's the first take profit there.
Yep. And take a third off at that point.
Okay.
Second take profit is at 124.05. Stops to entry.
Okay, so that's the second take profit area. Is that the next third?
No, just move stops to entry there. Oh, actually, no, go on. Yeah, take the next third off there. Fair enough. Yep.
Next third off, and then stops to break even. Okay.
Yeah.
Source to entry. I gotcha.
And let the rest run.
Okay,
that should be enough, I think, for now.
Okay.
Just be mindful of that news, those guys. The hourly's got to come off, if not triggered, at that point before the news. Can't have that running through the press conference. But the daily on the euro and the 4 hourly on euro yen will be okay.
Great stuff. All right, mate. All right, well let's wrap it up here. We got the looking at euro dollar short. We're looking at euro yen short with those levels. We're looking at the FTSE 100 to ease back into this area. Interesting, really, first hour bar that is not really too different to the first few 15-minute bars we've seen. We're just doji, 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 doji. If not a doji, at least a spinning top in it. It didn't quite open and close in the same area, but spinning top is indicative of an indecisive market. So no clear direction today. Definitely looking for the buy area down here. Anything that goes to the daily pivot, I suspect, will be sold off. So you're really in a kind of like this kind of buy sell range here. So that will probably give us an opportunity if it comes up to the daily pivot. It'll probably eventually start to come down to this point. But I am looking for a bounce at that point, so 73.36. Or on the UK 100, which you guys are trading, it will be something like 7,400. So let's wrap it up, mate. We'll be back tomorrow, same trade time, same trade channel. Do it all again and see if we've got any of these trades actually in the market triggered and we are managing. But have a great rest of afternoon and evening. And same to you, buddy. Have a great evening. It is evening where you are now, right?
It is indeed. It's news time, 1800 hours, and that's also wine o'clock.
Wine o'clock. Enjoy the wine o'clock.
All right, mate. Will do. Have a good one, everyone. I'll try and shut this down, mate, but I don't know how it's going to go.
All right.